How does commodity wealth lead to the paradox of abundance? Imagine living in a country rich with oil, minerals, or natural resources, yet still facing economic struggles. This puzzling situation is what we call the paradox of abundance. It happens when countries with plenty of commodities don't become wealthier or more stable. Instead, they often face slower growth and weaker institutions. How can so much resource wealth lead to less prosperity? Let's find out. When a country earns a lot of money from exporting resources like oil or minerals, it might seem like a big win. These revenues can boost government budgets and fund public projects. But the problem is, these sectors often act as economic enclaves. They don't create many jobs for local people or support other industries. This means the economy becomes too dependent on resource exports, making it vulnerable to price swings. Commodity prices tend to go through long periods of rising and falling, called commodity supercycles. During a boom, resource prices soar, and countries see a rush of income. But when prices drop, the economy can suddenly shrink. This boom-bust cycle makes planning difficult and can cause economic instability. Investors might find it risky to put money into these markets because of this volatility. Another issue is currency appreciation, often called Dutch disease. When resource exports flood the economy with foreign currency, the local currency can become too strong. This makes other exports like manufactured goods or agriculture less competitive internationally. As a result, these sectors shrink, and the economy becomes even more dependent on resource exports. Governments in resource-rich countries might also get lazy about building strong institutions. When resource revenues flow in easily, leaders may focus on short-term gains rather than long-term planning. This can lead to corruption, rent-seeking behavior, and weak governance. Without good institutions, economic development stalls, and inequality can grow. For investors, understanding this paradox is key. While resource booms can bring quick profits, they don't guarantee sustainable growth. Countries caught in the paradox often face unstable policies and economic risks. Commodity supercycles can intensify these issues, creating cycles of rapid growth followed by sharp declines. Smart strategies for investors include watching macroeconomic indicators and government policies in resource-dependent countries. Diversifying investments across different regions and sectors can help manage risks. Recognizing that resource wealth doesn't automatically mean broad prosperity is essential for making informed decisions. In essence, commodity wealth leads to the paradox of abundance because the benefits of resource riches often stay confined within specific sectors. This can hinder economic diversification, weaken institutions, and cause price volatility. For investors, understanding these dynamics helps avoid pitfalls and find opportunities even in challenging environments.